The markets are coiled, tensions is rising, but where does it snap first? Welcome to Daily Market Waves by Investing Angles, where every candle speaks, every Elliott Waves whispers, and we chart the turn before the herd even blinks. Tonight's map, volatility. A micro failure today could launch a macro move. Are you ready? Door. Did we just leave the bottom behind, or is the trap still open? Yen. Prepare for impact. Yields pulled back, but look closely. The candles are hiding something. TOT is lining up with the script. Gold. Everyone's dying to buy the dip. But was that the dip to buy? Oil. Surprise! Just kidding. Another textbook bullish failure. Uranium. It shocked many, but not our charts. Still tracking the forecast. Wheat. Quietly waving a flag from the agricultural trenches. Should you be concerned? And in stocks, S&P 500, a live multi-angle breakdown plus a deep dive into the staples sector, who is still holding the line. Nasdaq, a fresh Elliott Wave map with possible turns in sight. Feature of the day, NVDA and TSMC, tech giants, or just giants on shaky legs. Big thanks to all our 18,000 plus subscribers. You are the power behind this growth. If you're new, don't miss another signal. Like, share, subscribe, and drop your ticker in the comments. Want precise entries and exits? Master Trader Kyle posts daily setups in our private Discord. Surgical, structured, and backed by candles, waves, and stats. Let's go to the charts. And as usual, we start with the volatility index. This was the daily closure today. I would say it was a big failure. In order to make a bearish continuation candle, strong confirmation, it needed to close below 28.29. And it was there just 5 minutes before the closure. Unfortunately, it failed. Now this candle is bullish, and the chances for moving higher are significant. If we look at the weekly closure, weekly frame, this candle is coiling right now, and I would say that there is still holding the 8 weeks EMA, which is a strong support line at this point. And if volatility fails to break below this line, it will be a strong bullish closure. But this is not everything. This is the 3 months chart. Just a few days ago, volatility index made this cross 8x20 EMA, and on the 3 months chart, it is a very significant event. Technically, it happened on this chart 3 times. This was the first one when it started in 1996 and ended approximately 2003. Then the next one was here. It was this particular area when it started in October 2007 and ended in October 2011. And the most recent one was here, that started in 2019, in the middle of 2019, and ended only recently in January 2023. So I would like to say that this next chapter here, whatever it takes, it is most likely aligned with the one in 2008. If we consider multiple indicators and the candle map and all signals that we care about and that we analyze, so this one would most likely be resembling the one that the volatility index made in 2007-2011 time frame. Well, how high would it be? It's still mystery. However, the chances for a very significant move here are very big. Now, if we look at our Elliott Wave tracking, this is the chart. Nothing changed here. So we are seeing that the index moved a little lower. However, this move was insignificant. And I think that if we look at this particular target. Potentially this is a rectangle, another move down towards 24.5 or something like this. And this would be our target area. Well, once it hits it, we should see a move upward. So this is the perspective for volatility, and I would like you to remember the quarterly volatility index technical chart. Now let's have a look about dollar. As we discussed yesterday, dollar needed to close above 99.014 in order to make it bullish. Well, it overdid it, almost double, and a very strong bullish engulfing on a daily frame. And today we have a continuation candle. Most likely it will close bullish, and the chances for dollar forming a bottom would increase drastically. And this would be the weekly closure, just a little higher here, and the dollar would form a weekly bullish engulfing together with a very nice inverted hammer. Well, that would be a very strong signal for a for a reversal and for a rally. From Elliott Wave perspective, most likely, if we see the confirmation, then this would be it. A very nice wave 4, technically a textbook example. Wave A, wave B, wave C, in the ending with an ideal area between 98.3 and 96. Well, and after that, we should see a very strong move upward. And this would fully align with our long-term chart. Now we can see that there is a possibility for a bullish flag, a big one. So once this flag is complete, technically it could already be, we would be looking for wave 5 moving towards these targets. Well, now let's have a look at the other currency, and I'd like to show you some changes that happened on yen dollar. So what happened on the daily frame today? That yen technically confirmed a daily reversal, and not only on the daily frame, it also formed a very strong bullish engulfing on the 3-day frame. And if it pulls a little higher, then it has a very good chance to form something bullish on the weekly frame. And our chart remains practically the same. I did minor adjustments to the channel, and the levels remain the same. This is the chart that we proposed to our subscribers in November 2023. So far, everything remains intact, just minor changes. Wave 1, 2, and we have another wave, impulsive wave inside. Most likely this wave that starts next would be wave 5 of wave 3. And well, that's the perspective for yen and dollar. Now let's have a look at the bond market. So the next chapter, and what we are seeing here is, despite the move down that yields, especially the 10, 20 and 30 year, they moved down. However, they formed a very bullish candles, and they technically failed a reversal, and now we have good chances to see that rates will continue climbing. The 5-year and 2-year are just plain bullish. No surprises here after their confirmations of yesterday. And now if we look at the bigger candles, this is the daily, 2-day and the weekly frame for the 10-year yield. This is the failure, bearish failure, and now the odds are bullish on the daily frame. After 3 white soldiers, no surprises, there is a good chance that we see a continuation upward. The weekly, most likely it's going to negate this bearish candle. However, it's not that strongly bearish. Most likely it's just a consolidation flag. Maybe it will take another couple of weeks to form. Now let's move on to the TOT. TOT today advanced, but advanced on a very bad candle. So technically this a reversal one after hitting a higher high here. So it lost 28 days EMA, and now the chances for a move lower are very significant. If we look at the weekly frame, there is nothing bullish forming here, most likely another consolidation candle on the weekly frame, but we'll see it in 2 days on Friday. And the monthly so far is shaping bearish, and it's not a surprise because yesterday, after 15 days tower top, this monthly bearish closure would be just a normal expectation. And now I think we have clarity with our waves here. I think that the green can most likely be removed at this point. So the direction remains the same, and this was mostly ABC formation, something like this. So, and now let's see how fast would it go down. That's the chart, that's the perspective for TOT. And the final one in the bond market that I wanted to discuss is the Canadian 5-year yield. So this is the chart that we showed to our members on April 7th, saying that Canadian bonds practically formed a very strong diagonal, and right now we are seeing that the wave 1, wave 2 most likely completed, and we are looking for a very strong move up, pardon. And yeah, if the theory is right, then we should see an immediate move to 3.35 and 3.91 all within a couple of months. That would be a very disappointing move for many. Well, now let's move on to the commodities section, and we have many commodities to discuss today. And obviously we start with gold because it has a lot of pressing interest. First of all, I would like to say that the gold today is closing bearish, and this is a reversal confirmation on the daily frame. Unfortunately, the bigger frame are not quite telling at this moment. So the 3-day is closing with a bearish, potentially spinning top, but we would need to wait for 3 days for a confirmation. The weekly so far is also shaping as a spinning top, potentially a dark cloud cover. However, gold is slow and we have to be patient. If we look at the smaller frames, however, like 2 or 4 hour frame, so what we are seeing here is that the wave down is impulsive and it's not stopping yet. So far, this is just 2 consolidating candles on the 4-hour frame, and I think that it is going to move lower. And if we look at the wave itself, so this is the 4-hour frame that we made a call yesterday early morning saying that gold is not looking healthy on this frame, and so far it is going down. Well, so what I can tell about this Elliott wave, based on certain indicators, I think that this is going to be wave 3. We will be looking for wave 4 here and potentially wave 5 down there. So this is, let me print it here. So this would be wave 5 down there. So this is the perspective so far. We need to see how this wave behaves. So far I can see that this is forming a bearish flag, which could extend a little higher before it closes and forms another wave down. So this is wave incomplete. Here's the file. So this is an incomplete wave, and it is possible that wave 3 could even end with a diagonal. Then we might see a bigger wave 4 when everyone will be cheering that this is a reversal indeed. However, this wave so far has been corrective, and I'm expecting a move lower one way or the other. So that's the perspective for gold. If we look at GOD, it's even more concerning. So we have a clear bearish engulfing on the 2-day frame today. After a very strong bearish engulfing on the daily frame yesterday, today we have a red candle, and now we have a much stronger formation. So technically this is an island right now, bearish island, and if we don't see any pullback here, closure of this gap, and the move down continues, well, that would be a very concerning development, and but it wouldn't be surprising because of the 5 gaps, an extremely rare candle formation. Well, gold is bearish. Let's see how it closes the week. It could be a very important closure. Now let's have a look at the next commodity, and it is oil. So no surprises here, absolutely not. Yesterday we mentioned that in order to form a bottom, oil needs to close above this line. So it's been rejected 3 times. Today it was the 4th time, and a very strong bearish engulfing candle, breaking below the 8 days EMA. Most likely the 8 days it formed a bearish harami with a good chances to move lower, and on the weekly frame so far bearish harami is being formed. Let's after the bearish candle of last week. So far it is on track for lower prices. If we look at the Elliott Waves, no surprises here. This is the chart that we shared just a few days ago on Friday, saying that oil is potentially forming an ending diagonal, and it looks like this diagonal is complete exact at the minimum target level. Now the chances for a move towards this level is very high. So this is 58.4. However, considering a very strong impulse here and a very clean pullback, exactly 50% of this wave down, I would say the next wave down is due, and we can approximately measure its length. So it would be something like this, and at a minimum I would be looking for this particular target somewhere between 58.2 or 51.2 and 47.5. so this is the ballpark approximate target for the next move, and this I would say it's a lucky move if because if this is indeed wave 3 could be much longer, but we'll discuss it later today in our daily review with our members. Well, let's have a look at this. Oh, okay, so this is the chart for Brent, and this is something I wanted to bring to the table for discussion. This is the 4 months closure, potential 4 months closure, and with the move down today, Brent make it even more impossible. So in the remaining 5 trading days, it needs to rally about 17.5% in order to reverse this candle and make it, let's say, neutral bearish. Obviously, this is a very tall order, if not impossible. So this is just to keep things in perspective, just to keep things in mind on what is brewing. underneath. So, well, that's oil. Now let's move on to the next quick update on uranium. Energy fuels. As I said yesterday, so the candles were not extremely assuring. And the candle today, technically, it's a bullish candle and a very nice bullish harami. If it gets confirmed tomorrow, it means that this pullback is over and uranium is set to climb higher. The same thing happened on the 2-day frame, so the 2-day candle failed to reverse, to confirm a reversal. On the weekly frame, so far it is forming a dark cloud cover. However, if we see a pullback in the next 2 days, there might be an incomplete dark cloud cover or even less bearish candle. Let's see what it does. And from the perspective of waves, this is what we discussed before. The perspective on April 18th, there is a possibility that energy fuels forms a little lower wave 2. I would expect it to be healthier if it makes a little lower. However, if it goes higher, well, this is what it does. Well, I would consider this as wave 3, potential wave 3 of the next impulse. Well, that's uranium. Now let's talk about agriculture. Wheat. A very concerning development in wheat, although not very surprising. We have 3 candles. They are not quite 3 black crows, but very close. And this 50/200 days moving average bearish cross, which is looming here, and another weekly bearish engulfing potentially forming in 2 days. All these would be a reversal indicators. Monthly, last month closed with a strong bearish candle, and this could be opposing doji. 2 months frame is also set to close with a bearish, most likely bearish continuation candle. Now, if we look at our chart, April 23rd, but this chart is one of my favorite ones and one of the greatest hits. So technically on August 2nd, 2022, I outlined this path for wheat futures when they were 773, and I said it's going down towards 530 midpoint here, and they will be there by July 2024. This is exactly what happened. This line is July 2024, and the futures hit 514 at that date. Well, the chart still has a possibility to move further down, and this is the chart that I discussed just at the end of March. Potentially one flag, another flag, and the wheat is moving somewhere lower. So once we break this flag target, this would be the target area for the next move, which would be greatly aligned with the long-term chart, long-term perspective, and also with the candles. So far, this is a concerning move, and if we see a very strong bearish closure on the monthly and 2-month frames, then wheat is set for a decline. Now let's have a look at the stock market, and we'll discuss S&P 500 from multiple perspectives. So today's candle, if we look at the cash indices, S&P 500, Nasdaq, Dow Jones, and Russell, technically the candles are bearish. However, without confirmation, they still could be bullish ones. And I would say there is uncertainty here, and because once we look, for example, at the futures closure, they closed with, even though the candles are hammers, but they are green hammers, and with a good chances to see higher prices before any move down starts. And if we look at the 2-day frame, for example, S&P 500, Nasdaq, and other indices, so they closed with somewhat very healthy bullish candles. And I would say that the next day or two we might see higher prices. However, I would like to be very cautious because of this higher upper wicks or upper shadows of the candles. They show a very strong bearish influence here, and even though you might see higher prices, it doesn't mean that the candles would be green. So beware of this possibility. Now let's have a look at the technical side. So nothing changes here. One daily move, even 2 daily moves upward, don't change bearish MACD crosses. We remember that Nasdaq and Russell made their bearish MACD crosses, monthly MACD crosses, in March, and Dow Jones and S&P 500 just crossed at the beginning of April. So if they don't do anything and they don't reverse these crosses, and they would require a lot of effort for that, then we would have recorded crosses across all indices. And this is quite concerning for the market overall. So let's have a look at the S&P futures. What we are seeing here is that the chart that we shared with our subscribers and we discussed yesterday, so far it is looking good, and I would expect it to move a little higher, just for the sake of invalidating this blue count that is still hanging here, although it might not develop. Well, that's the perspective. Nothing changes here, and if you're interested in a bigger picture, we will discuss it normally in our daily reports and also in the weekly reports on our website investingangles.com. So this is the micro chart, the flag. So no surprises here. Wave A, corrective, big wave A, wave B, another correction down, and now it looks like it is forming an impulse. However, it might be a diagonal. Let's see. This is the target, somewhere between 56 and 5900. 5740 is an ideal one. Let's see if it hits there. But this move could be very sharp, so it might take just 1 day, maximum 2, before we see a reversal. Well, that's the main message here, is that this wave is corrective and we are expecting a reversal one way or the other. So the next move most likely will be in this direction from this target. Now let's have a look at the sectors. So what sectors technically formed the same candles that the major index. And if we look at the 2-day frames, for example, for financial, we are seeing a bullish candle, very good chances to move higher. Financial, technology, so similar thing. Technically all of them are aligned, very great alignment. The only concern here is that we are seeing that more and more indices are more and more sectors forming bearish crosses and or about to form bearish crosses. And I'd like to talk a little bit about XLP, consumer staples. This is I found that it formed very interesting candle combo, and it reminded me of something. So this is an XLP fresh chart, and let's make some waves here. So I'm considering that this was a closure. The top in September 2024 was either wave 1 or 2 or 3 or 5. So it doesn't matter at this moment. And I am looking for a corrective action here. So this was most likely wave 1, wave A. This is wave B. So this wave, and oh, not this wave. This is wave. That's what I'm thinking. So this is the bigger correction. What is unfolding right now? So this is most likely the wave A of a bigger wave B. This was wave B, and what is right now forming is wave C of wave B. This is the most interesting one, and let's have a look. Let's have, this is the top. So generally what I would expect right now is that this wave doesn't cross an all-time high, and if it doesn't, well, it will be the next move would be wave C somewhere here. What is the interesting about this wave, the last wave, is that this is most likely an ending diagonal, one way or the other, and I am looking for this particular wave. So this could be wave like this. So one more higher high is needed, or it could be wave like this. So let me change the color so it doesn't confuse you. So this is another possibility for an ending diagonal here. So either this one or that one. So the most critical point here is that this wave should better remain after below the all-time high here. So if it does, we have a very good chance. So this wave is not impulsive, however, it could be a motive wave, and this big and multiple overlaps indicate that there is a possibility for an impulsive wave, for a diagonal wave. So in our cases, we know about the diagonal, so this would be a return level 75.61. So let me put it here. So 75.61. So as soon as you see a very strong reversal candle, especially on the weekly frame, this would be the target for the next move. However, wave C could go a little lower, and I would expect it to do so. Well, other than that, that's a very quick sketch on Elliott Wave sketch on XLP, consumer staples. Now let's move on to the large caps. So technically, very similar, all agreed. Very similar candles on all stocks. Microsoft formed on a very neutral candle on the daily frame. However, on the 2-day frame is bullish. I think the same thing happened for Amazon. Yes, Amazon is technically the same, and bullish 2-day candle for Apple. So the expectation is that they move higher in the next 2 days. However, I'd like to emphasize it doesn't mean that they're going to close with green candles and move much higher. And most likely this is because of the weekly closure and the 15-day closure. If you remember, a couple of days we discussed very strong bearish formation. So the large caps and the sectors are aligned. Now let's have a look at Nasdaq Elliott Wave perspective. What we are seeing here is technically the chart that we discussed a while ago. Now we are seeing that this bearish flag has been extended, and Nasdaq is moving a little higher. I think that this would be the target, ideal target for this flag, for this type of wave, and this most likely gonna be wave A of a bigger ABC formation. If we look at the bigger frame, this is the chart that we discussed way back in April 12th, saying that Nasdaq most likely will be forming wave A, then wave B, and wave C. So far it is on track. The question is whether it goes immediately to wave B or it makes a bigger wave B here. So before making the move here for wave B in parentheses. Okay, so that's the perspective for Nasdaq. We are tracking it closely. The main signal here is that Nasdaq is bearish. Now let's have a look at the feature of the day, and the feature of the day is NVIDIA. So what we are seeing here, NVIDIA made a freshly made bearish cross, 100 over 200 days moving average. Some call it a death cross. Well, the candle is technically bullish bearish, needs a confirmation. If we look at the 2-day frame, unfortunately, this candle cannot be considered as bullish until it is closed. So for example, if you remember, Microsoft and Amazon, they formed bullish candles on a 2-day frame. However, NVIDIA formed a much smaller candle, much less powerful candle from the perspective of bearish odds, and this is bullish harami. Well, on the weekly frame, a very strong dark cloud cover. Most likely we would be looking for a new neutral candle this week. Now let's have a look at the Elliott Waves. So Elliott Waves are tracking very nicely based on our projection. This is April 10th. So far we are seeing NVIDIA is slowly climbing upward. However, I would like to say that this wave, for the first wave of the bottom, has been corrective, and it means that we would be looking for either wave B, C of a bigger B, or more horizontal one. So that's the perspective, and I would like to remind you, this was our call in December 27. We were saying that NVIDIA has a very good chance to move slightly higher and then drop towards this level, towards 90. Nobody believed then. Well, but this is just plain technicals, plain Elliott waves. Nothing surprising. So NVIDIA crossed the 90.69 line here, and I would be looking for another cross down and lower lows. If we look at another call that we made on December 29th, we said that NVIDIA had a very good chance to move lower after this cross, MACD bearish cross that it made on the 10-day frame. And now you are seeing that NVIDIA elevates bearish odds and makes an 8/20 EMA bearish cross. So the chances for it to move lower, so far it lost 43%. It was off the top, but the midpoint would be about 50%, and the worst case scenario about 80%. So these are the chances. And the final one, I'd like to talk about TSMC. When we suggested that TSMC is about to return to 133 on January 27th, well, everyone was very skeptical. However, this target is right now considered hit. So the low was 134.25. And I think I have a much worse news here. So the wave down was an impulsive wave, and it means that we would be looking for a much bigger corrective action. So this is the perspective: wave A, wave B, and maybe wave C somewhere here. I think we can consider that this is wave 5 of a bigger degree. And if we look at the perspective, this is an estimate. The next target would be somewhere between 50 and 62% of return. So this is wave 5 and this would be wave 1 cycle. So this would be target for a cycle wave 2. And 62% is not a limit for this wave, so it can get lower. It can last up to 78% of the wave 1. Well, that's the perspective, but let's keep it optimistic for now. So far, this is potentially a zigzag will be forming. Let's see how it develops. We will be looking closely. I'm not talking about candles. We will wait until the month's end and then we will discuss its closure. Well, that's been a session today, and now let me wrap it up. Volatility teased the move. It may just be a prelude to something bigger. Dollar stands at an inflection. Confirmation awaits on the weekly frame. Yen is about to speak. Don't look away. Yields dipped, but the candles never lied. TOT aligns with the coming wave. Gold tempted the crowd, but was it bait or the base? The wave will answer soon. Let's see how it closes on the weekly. Oil stayed loyal to failure. Bulls still can't catch a break. Uranium surprised many, but not us. Wheat, not making headlines, but there are signals worth watching. In the indices, S&P 500 showed its layers. Staples are diagonal aligned, and the implications matter. Nasdaq keeps its Elliott secrets, but not for long. NVDA and TSMC, our feature breakdown shows they are not as solid as the headlines suggest. For daily setups, multi-time frame forecasts, and live Elliott Wave maps, join our private Discord. Master Trader Kyle and I share real-time insights. No fluff, just structure and stats. If you value timing, structure, and statistical edge, this is the channel to follow. To our subscribers, thank you. Big thank you. We see you. We are growing stronger every day. Like it, share it, repost it, because timing is everything and the turn waits for no one. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we charge the turn before the herd even blinks.